Good morning, everyone. Welcome to 24/7. My name is Nehar Kavaria, and I'm with you with the area of accounting and financial management for bankers. So, the series is going on of 60 classes in 60 days. So, I hope you have counted your days and preparing properly for this examination. Kindly audible as well as visible to you. Okay, so let's continue further for the particular topic. Okay, so let's talk about the questions. There 60 days, 60 classes. The first question says, which one is the advantage of accounting? It replaces the memory or shows the PV of the business or the present value of the business. It is accounting does not record the price level changes or accounting is fully exact. What is the point there? See, counting is never fully exact. I cannot say that because sometimes it happens is it doesn't cover the qualitative aspect of everything. So technically it is never fully exact. One of the points there. Okay, the answer is visible, but let's look forward to it. Number one, in terms of accounting, it is never fully exact. Number two, accounting does not record the price level changes. Yes, it does not record the price level changes because if it records all those financial price level changes, then it would waste so much time on the price level adjustment every single year that it will forget its working itself. Then it replaces the memory. This is basically an advantage, correct? And then shows the present value of the business. This is wrong. It shows the historical value, not the present value. So technically this part is not correct. So in this case the correct answer is it replaces the memory. See, I don't remember what I spent on a specific day. For example, if you ask me someday that ma'am, what was the amount that you spent on 24th of February, then I don't know. But if I wrote it down, then I can let you know what amount was being spent and on what particular day. That is, it has over the period of time replaced the memory. Then the profit on reissue of forfeited shares is transferred to general reserve, capital redemption reserve, capital reserve, or revenue reserve. Now, when we talk about this era, the profit on reissue of forfeited shares, this is a part of the module B there, right? So this is the company accounts era. The profits on reissue of forfeited share. What happened was the particular company asked people to pay their money, their pending money. They failed to pay that. So we forfeited their shares. Their shares were taken back by the company. Now they said that whatever shares were taken back, I would like to reissue those shares to someone else. It's also correct. If we reissue those shares to someone else, then what will it be called there? General reserve, capital redemption reserve, capital reserve, or revenue reserve. In this case, what will happen? In this case, the entire thing would look like it would be the profit on reissue would be called, it will be taken to the capital reserve. The particular journal entry is share forfeiture to CR or capital reserve. This is the formula. This is the journal entry for the same. Because whatever excessive we have got. See, we can give discount to the next shareholder. But what if we don't give that discount? So if we don't give that discount, the entire amount will go to the capital reserve itself. Next question. The question says the debt equity ratio of a company is 1:2. Which of the following transactions will increase it? Issue of new shares for cash, redemption of debentures, issue of debentures, or goods purchased on credit. One of the basic things. Debt and equity. Nothing is affected by goods purchased on credit because we have purchased these goods on credit. This is current assets and current liability based scenario, so it's taken away there. Now, excuse me, if we have debt and we have equity, this is our debt and this is our equity. If this is the scenario, then what is happening is if I issue more shares, it is currently 1 upon 2. If I issue more shares, then I'll get more money there. Now, if this is 10,000, I'm multiplying both the areas with 10,000 each. This is 20 currently, and on 20, just add 10 more. So in this case, your denominator is increasing, the ratio will fall. So technically, first case will not work. Now the point is, can we work upon the issue of debentures? If I issue more debentures, that means it would be, if my earlier the numerator and denominator were 1 by 2, I add 2 here. Nothing's changing here, it would turn into 3 by 2. In this case, this point is increasing. That is why it is issue of debentures for cash. The loan is increasing, so debt equity ratio will also be increasing. While redemption means we are paying off the debt. Whatever debt we have, if we pay it off, then technically the ratio will be completely changed. So issue of debentures for cash as well as debentures will increase. The increase and equity will remain unchanged because equity is the owner's funds. The owner's funds do not change. There is a change only and only in the funds of the changes there only in funds of the debentures. The cost of revenue from operations. What is the cost of revenue from operations, everyone? Revenue from operations minus net profit, revenue from operations minus GP, revenue from operations minus closing inventory or purchases. And along with this, have you downloaded our app yet? If you haven't, then go ahead and download it. There are so many new features that has been added. And if you're looking forward to the Adda 24/7 app, then what you can do is it's given in the link below. So go ahead and check it out on our website or in our app. You can find all the details. If I talk about the app there, you can look forward towards in the description area, you'll find the download 24/7 app. If you download the app, you're not only getting the classes that we are teaching in terms of our paid classes, but also the details of each and every the YouTube class as well. You can watch your YouTube classes. The playlist of entire things can be visible, and even the past YouTube classes would be visible in the app itself. Along with that, you will be also having the student section. From the student section, you can get all the details regarding the doubts, how other people are preparing, and even you can have your doubts being shared with others. Right? Then the next point is you also get notifications for each and every classes in the app itself. So technically, even the most important dates for the examinations are also discussed there. So you will get all the information that is necessary for your preparation in that area itself. So if you haven't thought of taking the app yet, then kindly download it now and as early as possible so that you can prepare your organization, prepare your JAIIB examination, then JAIIB and CIB examination altogether in a better way, because ultimately that particular thing will lead to the achievement of your objectives now. Okay, now the next point. Cost of revenue from operations. If I talk about the cost of revenue from operations, it is basically the earnings that the organization would have made. It is basically, if I talk about cost, it is sales minus profit. Whatever the sales of the organization is, we reduce the point of profit there. Right? It would be revenue from operations minus the profit. And to the gross profit. So technically, in this case, the correct answer is B. Done, everyone? Next question. Owner's equity stands for. If I talk about owner's equity, this is the money invested by the owner of that organization. Is it fixed assets minus fixed liabilities, or fixed assets minus current liabilities, current assets minus fixed liabilities, or total assets minus total outside liabilities? If I talk about this area, owner's equity, it stands for what? Owner's equity is the fund invested by the owner himself. So if it is only about himself, then remove all the total outside liabilities. See, if I said that for that particular equipment I spent 1 lakh rupees, that is a total asset. Then out of that, the outside liabilities or the money which outsiders would have paid is rupees 40,000. So what is the amount that I would have paid? 10,000 minus 40, it is 60,000. Right? So in this case, the correct answer would be total assets minus total outside liabilities. Right? Now comes the next question. The insurance expenses paid to bring the equipment from the place of purchase to the place of installation is a type of revenue expenditure, capital expenditure, deferred revenue, or we talk about operating expenses. See, whenever I buy a particular asset which is quite huge and that is important for the business, and since it's huge, it has to be transported in a proper way. So if we have to transport those things, then whatever expenses we are incurring before that particular asset is ready to use, all those expenses would become a capital expenditure. Because see, if I get a particular AC and now if I want to install that AC in our office itself, so what will happen? To get that particular AC installed now, I will have to wait. What do I have to wait for? If I have to get that AC installed, so first of all, the first thing that I have to do is I'll have to get the AC to my premises, and then I have to install it. Only then I'll be able to use it. Before that, I won't be able to use it. So that means every expense that I'll be incurring after purchasing that particular asset from the showroom itself to reaching my place is also part of their capital expenditure. The correct answer is capital expenditure. Till the time that particular thing is not ready to use, the whatever expenses we are incurring will all be included in capital expenditure. The return of investment is calculated as net profit before tax divided by the tangible net worth plus long-term liabilities, or net worth plus long-term liabilities, and there is net profit after tax, or net profit before tax and tangible net worth and outside liabilities. And then we can say the net profit before interest and tax, net worth plus long-term liabilities. Normally it is before interest and tax. Then first of all, it is before interest and tax, the total net worth of the organization plus the LTL, that is long term loans. Why? Because the capital employed means the money that is invested in the business for a long period of time would be considered in this area. Okay, the next question is quite long, so go ahead and try it out, everyone. The question says that while finalizing the current year's profit, the company realized that there was an error in the valuation of the inventory, right, of the closing inventory of the previous year. If anything belongs to the previous year, that was the closing amount of the previous year, so for this particular year the amount will become opening, right? So in this case, as a result, the previous year profit is overstated and current year is overstated as well. Previous year profit is understated, this year profit is overstated. Previous year profit is understated, current year is overstated. Previous was overstated and this year's is understated. The best way to find out this particular concept is, first of all, see, prepare the trading account. If I put the closing stock in the year, previous year it was a closing stock, so in the previous year it was stated here. It was a part of the closing stock. And if I talk about the current year, it would be stated here. Why? Because this year this is the stock that we are parting apart from. So this is operating inventory. So what is happening is, earlier your income was more. Now your expense is more. Right? So in this case, what will happen if the income is more? Then the previous year profit, no, this is wrong. It says in the current year there was an error in valuation of the closing inventory. The previous year closing inventory was valued more No. In this case, the previous year profit was overstated because there is more income. The answer is D, not B. The answer is D, everyone. The previous year profit is increased because the income side is more. So technically, the correct answer is D, not B. The previous year profit is overestimated and this year is understated. This point is wrong, everyone. Next question. Question says a firm following an aggressive working capital strategy would hold substantial amount of fixed assets, minimize the amount of short-term borrowing, or finance fluctuating assets with long-term financing, or they minimize the amount of funds held in with every liquid asset. What will they do, everyone? Okay. So in this case, the correct answer would be what exactly? This is an aggressive strategy where they are taking care of their working capital. When you are taking care of your working capital aggressively, that means you will minimize the amount of funds that you want to keep in the working capital. You don't want too much of amount to be spent on day-to-day working or for the business. You are just focusing upon saving it for the future of the business. Which liabilities are not included in the total of the balance sheet, but their mention is made in the balance sheet? Intangible liabilities, fictitious liabilities, current liabilities, or contingent liabilities. If I talk about the liabilities which are not included in the balance sheet, that is contingent actually. Contingent means it is uncertain, and since the things are uncertain, we do not even know whether it will turn out that way or not. That is something that we'll define as contingent liabilities. So contingent means anything which is uncertain. So anything that is uncertain is not a part of the balance sheet. It is just noted down there in the footnote. Okay, so this is where I end my session. So if you're looking forward towards our courses, then have you checked out our courses yet? Because for JIB, we have introduced a new batch, and if you haven't joined it yet, then kindly go ahead. This is a good point of time where you can take up the batch and look forward towards your studies in a better manner. For that, what I'll do is I'll just show you where to go. Okay, you just have to go on to our website, that is www.adda247.com. Go to that area, go into the area of JIB and CIB, and take up the JIB area. In terms of the JIB area, you can take JIB Kamaha pack, which is purely JIB based, and then we have JIB and CIB pack. Why not to prepare? Why to prepare only for JIB? Let's focus on both of these things together now. There you can take up the JIB and CIB Maha pack, which has a validity of 12 months, and due to the Maha pack the double validity going on Maha packs, you will get it for 2 years rather than for 1 year. 1100 of live hours, 72 test series, 512 videos, 120 ebooks, and that too you're getting both the classes. Both English medium and bilingual is opened up for you. And with this, what do you get exactly? Why do we call that Maha packs are beneficial? In this case, you get the live classes, you get the mock tests, you get all revision batches, you get all recorded classes, you get the ebooks, the numerical batches, case study batches, whatever batches we are introducing at whatever point of time, all those batches would be available for you, visible for you. Then you can take it up, and at this point of time, it is at a discount of 81% and double validity is there. So technically, you need to hurry up because this opportunity will help you a lot. It would cost you 10,799.20. That means if you're preparing for both JIB and CIB combined, your cost is less than 1,000 per month. That too for 2 years. continuously. You just have to pay 10,000 at one point of time, and then you are done with it. So it is 10,789.20. So if you're looking forward to it, then kindly go ahead and check it out in our website or in our app. And if you haven't downloaded the app yet, then kindly go ahead and check it out in the app itself, because that will help you a lot in terms of working. Then that would be very handy wherever you are, whatever you are doing. You can check out our courses and start studying immediately.